Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
Welcome back. You're watching Market Pulse on Bloomberg TV. India now to our special series for Diwali, where we get you the fund managers of top performing funds across different categories. Today, we focus on short-term debt funds. We speak to Rajeev Radhakrishnan, manager of SBI Corporate Bond Fund, to understand his view on corporate health and the interest rate trajectory. Listen in.
One of the main factors that would have driven the performance in this product, I would say it is the active credit selection that we have done. Secondly, there have been a few instances of few cases where we've been able to identify credits that have actually tightened in terms of spreads, largely arising out of rating upgrade actions as well. And the third factor for the performance or the outperformance of the fund over a period of time has been our active sectoral calls as well. So in terms of either staying away from certain sectors that have come under stress of late, or in identifying sectors ahead of the market in terms of over a period of time, the credits in those sectors have actually tightened in terms of spreads. So it's a combination of both that probably would have helped the fund in its performance.
So as you point out, Rajeev, in terms of certain sectors that you've stayed away from and certain sectors that you probably have managed to time well, take us through what has been the sectoral calls that you have taken, or at least those which you have really refrained yourself from.
So in terms of sector that we have sort of stayed away, the commodity sector that probably comes to my mind. As you know, that's one space where due to global as well as domestic factors, we've seen significant stress across. There have been a few instances of downgrades in that space. So across our funds, actually, we have avoided exposure to commodities. That's the sectors that we've stayed away from. And in terms of exposure and actively identifying sectors ahead of the market, I would say that we've been probably one of the earliest investors in microfinance. As you know, regulatory environment surrounding that sector has significantly changed over the last few years. A lot of entities in that space have got license to operate as payment banks. So this is probably one sector that has probably seen a positive change at the margin in terms of the overall operating environment.
Rajeev, could you give us a sense in terms of the interest rate scenario? We've seen the debt funds really having great returns in the last few years as we were headed for a downward trajectory in terms of interest rates. Now that there is a belief that perhaps there's going to be a pause, where do you see really your view on the interest rate side, and also secondly, as far as the returns that one is getting from debt funds, where do you see, do you think that they will remain attractive?
See, as you rightly mentioned, over the last couple of years, debt funds have done very well on the back of capital gains arising out of interest rate cuts from the RBI. We still maintain a medium-term positive view on interest rates. We feel that the conditions have been laid down for a very structural downshift in inflation in India, given both the policy actions from the government as well as from the RBI. So we still believe that over a period of time, investors who have the appetite for duration exposure, there is still a benefit to be had by having exposure to long-term funds. Having said that, there are medium-term challenges. Over the next couple of months, the US Fed is expected to start its policy normalization. That probably would have some impact on how flows pan out to emerging markets. So it will have its impact on the currency as well as interest rates in our domestic market. The second factor is that the RBI, after having cut policy rates by 125 basis points, they would want to wait out and see the impact of its previous actions on the market. And the third factor that probably would call for a near-term pause would be the near-term trajectory of CPI inflation. So these three factors probably would call out for a near-term pause in policy rates, but over a period of time, since the broad conditions for a structural decline in inflation have been more or less met, we would still believe that long-term funds would have a very good future as regards potential investments.
Rajeev, what about, as far as the corporate bond market is concerned, it gives a sense with regard to the corporate health, and therefore want to get a sense with regard to that how are you viewing the corporate health, and also more importantly the government spending story. How is it panning out?
The signals that we get from probably the credit markets today is that I would say it's rather largely mixed, because even today across the sectors, there are still a few sectors where the credit markets are not that well developed. You do not have too many issuances there. There's probably still a concentration from a couple of sectors. But broadly, I think in terms of indicators, there could be a few sectors which could still face a bit of stress. I mentioned commodities earlier. The entire infrastructure space, probably we don't have too many issuers from that space, so very difficult to actually really have any clear-cut indicator coming out of that space. So in terms of expenditure, the government spending is, in terms of the mix, it's definitely changed for the better. It's largely on capital expenditure rather than revenue side. We've seen the impact of that in terms of, I would say the immediate impact would be in terms of how liquidity in the system evolves, because from a period where the government builds up cash balances, now with government spending being relatively healthy in the first half of the year, the system liquidity actually has started to get better.
Well, we'll take a quick break, but up next, Telecom Commission meets today. The issue of spectrum capping, sharing and trading guidelines is on the agenda. Details after the break.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund Family.